6%, it would be usury. And in the modern times, a lot of talk is going about Islamic banking. Now, what does Islamic banking mean? There you get capital, you are not to pay interest on it at a predetermined rate. Islamic banking as such is a profit and loss sharing agreement between the bank and the partner who will be inducted with the document. Now, in this profit and loss sharing agreement, again, as we say, a lot of praise is made of Islamic banking and its benefits to the people. What happens is that you are transferring the risk again to the depositor. We must understand very clearly what is there in banking. Any person who is giving money for banking is a risk-averse person. He is trying to avoid risk. He is not trying to gain money or earn money. He is a risk-averse person. He is ready to take lower interest and deposit his money. But then what comes in with this Islamic banking concept, we say we are not going to take any interest, but then we are again making the depositor as putting him into the same risk as the business. Therefore, this relation between borrowing and the Borrowing and Lending Act, which is necessary to banking, and the basic philosophy of banking being that funds should not be left idle. The bank takes the money, it is deposited with you. Now, if this fund is left idle, it is not being used for productive purposes. So, to bring it into productive purposes, it is lending. Now, when it is lending at some predetermined rate, at a floating rate or whatever goes on at the moment, at the prevailing time. Now, as I understand it, the history of modern banking, if one has to understand, one has to look at the European structure. About the emergence of the banks, right from the goldsmiths of London, when London became a big financial center, with the London Exchange coming into existence, and then the emergence of Bank of England as a central banking system. Now, what that happened, how this Bank of England emerges as a central banking system is also a very unique history in itself. That history is about the 65-mile radius. It's the first time when the charter came to Bank of England, it was 65-mile radius. That is the region in which it could bring banknotes. So the emergence of banknotes, these notes, checks and these instruments which the bank were using were basically to facilitate transactions, to make capital flow from one source to another. Now when the 65-mile radius was there, then other banks, Bank of Scotland and other banks beyond the 65-mile radius are also printing notes. So Bank of England, with its monopoly of printing banknotes, became the only bank within this geographical region. Thereafter, it took on its own financial and social responsibilities only in the Barings Bank case. That was the first time when the Bank of England came out as a financial institution with social responsibilities. So what I am trying to say is a bank is a socially relevant financial institution. Now, to understand its relation with the central banking system like RBI and the international markets where Basel I, Basel II and this Board of International Settlement which is there in Switzerland. Now, all this is governing the standardization of monetary policy across the globe and seeing to it that predatory pricing or competition laws are not violated. So when we are speaking about banking, we will have to look at the relevant competition laws. They have to be in the frame of the competition laws, and they have to also be in frame of the Money Laundering Act and other acts which, as Mr. Gupta has initiated, that we are speaking about terrorism. Terrorism needs to finance its activities across geographical jurisdictions, various jurisdictions. So it needs these channels. So most of the banks, they have to be very, very clear in their disclosure rules, how they disclose these facts of the source of funds, where from these funds come, and where are they going. Now this part, which we see is, if we analyze the history of banking in USA and history of banking in UK, we find some differences. A Goldsmith approach, that of UK, is basically different from the gold digger banks of USA. Basically, the Midwest banks, which were gold digger banks, they had a great dislike. I mean, at that time, legislation was also against there being interstate branch banking. So, the act which I wanted to refer to, that is would be the, that somebody can help me out, the earlier act where the Glass-Steagall Act, 1933. The Glass-Steagall Act at that point of time, in 1933, it said you cannot, there has to be a complete separation between merchant banking or commercial banking and investment banking. Then it had to be repealed. It got repealed much later in an act recently, that is Graham-Leach-Bailey Act 1999. And today in United States, the entire talk centers whether they should restore the Glass-Steagall Act and separate the banks, to say you do commercial banking or you do investment banking. Both can't go together. And investment banking's roles are different. There the riskiness goes up. They come out with financial instruments, pooling of these securitization, as said, securitization, the pooling of mortgages and selling them as financial instruments or securities to other banks. This has a ripple effect. Therefore, if we look at the entire history of banking, what is emerging and what can be said, if we take it as a model, some sort of a model where we have to analyze, is basically the choices which we make. We have to look at it in a social choice framework. If you use the social choice framework, that is basically these individual choices and all these choices by the society also, in a generalized frame. And what are the values, the human values which we are using? Because speaking about value of money and monetary value of things is not sufficient. All these banking activities, they have to take into account the basic human values and whether they can perform or do their duty as a socially relevant institution. Their mere search for efficiency and optimality, which is the Chicago School of Economics, that the bank's activity should be optimal and efficient and huge mathematical models are built up. For what purpose? While writing this paper which I wanted to address you with, this is the conclusion I came to. You can't have optimality and efficiency simultaneously. Any bank which is trying to do this is bound to go, there has to be a structural meltdown. This bank will collapse. And merely is trying to seize on economies of scale by opening branches, that also doesn't work. So what is the optimum which a bank can say, whether it seeks an optimum or whether it will seek a very efficient working? So basically, let me conclude. This is general. If we have a model, I can give you the details on the relevant legislations and the other acts. I mean, we have to come to securitization, as Madam Gupta pointed out. Now, this securitization, this kind of a particular securitization act is not there in USA. In UK also, it is a very recent development. Now, this entire concept of securitization in terms of quick confiscatory and liquidation proceeding is not the true meaning of securitization. What Indian Securitization Act has done is to make these debts or whatever which cannot be now recovered to be recovered outside the scope of the normal courts. Now, this may have helped the Indian banking system in the present scenario, but elsewhere they have to go through these normal civil courts. So let me sum it up. What are my conclusions are here. 2-3 reports like that of the International Monetary Fund, the recent report 2010-11 on the banking structure. What it says is, one of its basic conclusions is that all across the emerging countries, this expropriation and seizure risk has fallen. We have no doubt about that. That means there is now growing political stability. It also shows that the credit risks have increased. In the developed countries. Therefore, banking, as I said, if it is associated with risk, the risks being legal, political, economic, or the market risk. Now, what the IMF report says that it is sovereign default is on the increase in the developing countries, while emerging countries like India are on a safer side. Even the monetary policy recently released by the Reserve Bank of India, that's October, it also says that the IMF is predicting a slower growth globally, but we are predicting a higher domestic growth internally, taking the domestic factor in view. Correct? The domestic market of India is very large. Therefore, we can easily say that the domestic factor can give us a higher growth rate. But then what it says is something which should be brought to your attention. It says that it suggests a ring of banking institutions. Now, what does that mean? What is this ring of banking institutions the Reserve Bank of India is referring to? Now, if they create a ring of banking institutions, and all these institutions are interconnected in some way, now what is the effect it will have on competition? Or whether this ring of banking institutions is only to improve their financial stability. We come from all these now. Again, as we said, the main question is about money laundering and disclosure rules, which will affect our terrorist funding directly. Now, this Money Laundering Act is not sufficient. The Money Laundering Act passed in India is not sufficient to handle this. What basically I would like to suggest at the moment is, suppose the international financial reporting standards are strictly adhered to. India does not apply the international financial reporting standards in toto, or there is an attempt to bring the financial reporting standards to that level. If it is strictly adhered to, maybe the auditor will detect. So it has to be strictly adhered to. And then the judicial outlook is very important. The judicial outlook of fair and equitable treatment. You can't just say that it's a multinational or therefore it is wrong, or say it is a Pakistani concern, therefore it must be involved in terrorism. You can't say that. You have to have a judicial outlook of fair and equitable treatment. It will increase the confidence level in banking. Now, for the depositor, what can be said? The deposit insurance in India is abysmally low. You may have tens of accounts in the same bank, and any amount of amount deposited in the bank, probably if I am not wrong, it's 1 lakh rupees or something, that the deposit insurance which you can get on bank failure.
Some proportionate
1 lakh rupees is probably the limit. Maximum. So this deposit insurance has to improve if you want to give security to the depositor. The other thing is, we have a complete lack of what we call legal clinic studying. This legal clinic system has to be implemented. There has to be empirical study. These young, bright law students must be asked to go and collect empirical data and see what are the actual problems faced in implementing these laws, or whether these laws are having any meaning, or they are acting in the wrong or going in the retrograde direction. Now, one of the conclusions which I came to was that the banks should act only as market operators and not manipulators. The banks have been acting as manipulators instead of just being the market operators. And there is sufficient data, economic data, even other kind of cases of bank fraud and other things. Now, the issue is bank fraud. How do we deal with bank fraud? In India, we don't have a bank fraud separate act which will make all the actions criminal. It is governed by some parts in IPC and some parts of CPC. But in UK, a new act has come, the Frauds Act. Now, this is making it very specific. Banking frauds, a very specific type of offence. Thank you, sir. This is my